When I graduated from college and officially entered the investment management business, I was fascinated by the stock market. There were more than 6,000 individual companies that I could invest in, and the stock market was about to take off. The Dow Jones Industrial Average traded at just around the 1,100 level. It's like 35,000 today. And there was a group I joined called the Association of Collegiate Entrepreneurs, where you could meet people like Steve Jobs. I spoke at a conference, and a very young Michael Dell approached me during the Q&A. He asked if I thought a good business could start in a dorm room. Microsoft would go public in 1986, destined to become one of the most valuable companies of all time. There were exciting innovations in technology. Cell phones would soon appear in the mainstream. Food innovations, new restaurants, new hardware, software, semiconductors, telecommunications, entertainment, all rapidly advancing. The internet revolution lay ahead, as did the advent of artificial intelligence. I started a newsletter a couple of years later titled The Personal Capitalist, because it seemed that the opportunities were so vast that people would need a guide on how best to invest and profit from the capitalist revolution underway. Average people could become millionaires simply by working hard and picking the right stocks. And that was the Reagan era. It was so cool to be an American, to live the American dream. Nearly every day there was a new entrepreneur with a great new idea hoping you'd invest with him or her. The sky was the limit. What I didn't understand then was the undercurrent of financialization, globalization, and regulation destined to squash that American dream. I had no idea that Wall Street and Washington would conspire in the 1990s to derail the opportunity train for ordinary people. I could never have imagined what history has proven true. The number of investable stocks on the stock market is substantially smaller today than when I graduated from college more than 40 years ago. Looking at the data, I was right in my optimism initially. The number of investable public companies did grow nicely until 1996, by about a third. But then it plummeted over the next 3 decades, as shown in the Grok-created chart using data from the Fed, the World Bank, and other sources. You can see the number of public companies has been cut in half. That's shocking. It's happened as our national population has grown by 110 million people, a 50% increase. Our economy, as measured by nominal GDP, has grown from 3.6 trillion a year to 28 trillion. That's an 8-fold increase, and yet the number of investable stocks has shrunk in half. How can that be right? Sadly, it is right, and it's a big part of the reason that young people are embracing socialism and even communism. Even U.S. News recognizes that Gen Z is embracing socialism. Polls show that a third of Americans under 30 want communism. If we don't address this quickly, our nation will be on a path to failure. Here we've got U.S. News. Why is Gen Z embracing socialism? We need economic justice. That means opportunity for both entrepreneurs and investors of all ages and all socioeconomic backgrounds. The good news, President Trump has begun to recognize this need and is taking some action to address it. It's a good start, but more will be needed. Over the past 3 or 4 decades, we've seen the American dream eroded. It's time to take that back. Watching Zohran Mamdani in New York, that's a massive wake-up call. Something is terribly wrong, and the solution is not communism. That's a cancer that will only spread misery and inequality. The real answer is free market capitalism, which has been strangled slowly in my lifetime. The evidence of declining stock market opportunities points directly back to financialization, excessive regulation, and destructive globalization, all designed by the elite of the World Economic Forum. Everyone has heard of the Dow Jones Industrial Average with 30 stocks, and of course the S&P 500. But when I started, a major index was called the Wilshire 5000. It was supposed to be the 5,000 largest stocks on the public exchanges. It was a big deal to get included in it. They still call it the Wilshire 5000, but there are only 3,400 companies that qualify, and that number keeps shrinking. I remember well when Sir John Templeton retired in the mid-1990s. He told me then that the number of stocks would start shrinking. That's one of many things he was right about. He also warned it would be dangerous for capitalism. I know he was right about that also. We now have more exchange-traded funds, ETFs, than stocks, and twice as many mutual funds as stocks. That means for every public company that you can invest in, there are 3 funds or ETFs investing in it. That's what I mean by financialization. More people are making more money from managing stocks than actually companies in which to invest. This creates all kinds of problems. Most of all, it increases the wealth gap, convincing young people that they should embrace communism. That's the worst possible message. Financialization actually started in 1971 when Richard Nixon, by executive order, formally abandoned the last tie that our money had to gold or silver. Once gold was removed from the equation, the federal government could print or more accurately create as much money as they wanted. This helps the wealthy, but it hurts the average American through inflation. From 1971 to present, the dollar has lost 90% of its purchasing power. More money has made more money from money than actually making and building stuff. Entrepreneurs get a hosepipe of money from private sources and no longer need to raise capital from the general public. That's why private equity has boomed even as the number of stocks on the public markets have plummeted. Thus, the American dream seems reserved only for the wealthy. This is known as the Cantillon Effect, named after the 18th century Irish-French economist Richard Cantillon. He taught us that when new money is created and introduced into an economy, it doesn't spread evenly, but rather flows through the system, creating winners who benefit from being closer to the money source and losers who face rising prices and a decrease in their purchasing power. Those closest to the money creation, such as central banks, financial institutions, and the wealthy, gain increased purchasing power first, while the wider population, particularly the working class, experiences inflation and higher costs as money gradually flies through the economy. You can see in a chart from the Federal Reserve how increase in the money supply, as known as M2, has resulted in the very wealthy, the top 0.1%, getting richer at the same pace as the money grows, while the rest of us lag behind with higher prices and a shrinking dollar. And once the wealthy learned they could build and finance companies outside of the public markets, they realized they could make even more personal gains while the rest of us get crumbs. Don't get me wrong. I understand why entrepreneurs prefer private equity to going public. The money is growing faster, there's much less regulation, and a lot less public scrutiny. Private equity has been booming, but that's creating this wealth gap. We'll cover this and the shrinking stock market more right after this break. In uncertain times, finding stability in the economy can feel challenging. But what if you could navigate economic volatility while honoring your biblical values? At Timothy Plan, they believe this balance is possible. Timothy Plan filters its volatility-weighted ETFs and family of mutual funds through a biblical pro-life and pro-family lens, so you can see competitive returns and moral responsibility, helping you to weather the economic storms. With Timothy Plan, align your investments with your values while adapting to our ever-changing culture. Since 1994, Timothy Plan has been recognized leader in biblically responsible investing. Timothy Plan, your bridge between faith, finances, and the future. Visit timothyplan.com or call 1-800-TIM-PLAN or 1-800-846-7526. Investing includes risk, including possible loss of principal. Before investing, carefully consider a fund's investment objectives, risks, charges, and expenses contained in the prospectus available at timothyplan.com.
Gold holds its value far better than the US dollar. Let's see what happens when I go in this sweet shop and pay with gold. Can I pay with gold?
I mean, you can wait, find out how much it costs.
Do you know what? Basically, do you know why I'm even using gold?
I do not.
It holds its value over time,
Yeah.
but it's a bit difficult to spend, isn't it? Do you take this?
Yes.
That's MasterCard. Yeah, but I'm actually going to pay with gold, believe it or not, using this. Using this. That's my MasterCard, and it's linked to my gold wallet. So let's just watch that. Authorizing. Yeah, add a tip.
Thank you.
So this is your store?
Yes, sir.
And how much gold did I pay?
0.2243 grams.
Yeah, success. Bought with gold, paid with glint.
Private equity is booming while the public stock market number of stocks is shrinking. Why? Because private equity has become easier and more profitable. You know, we had the accounting scandal at Enron, and Congress rushed to increase regulations on public companies with the Dodd-Frank bill. Now, if your company is public, you're forced into a much higher level of public scrutiny, increasing your costs and other challenges. What was supposed to help the little guy has only been hurting us. We've been discussing before the break the impact of a shrinking supply of investable stocks, despite the fact that our economy and population has boomed. What this means in practical terms is that average Americans are being left out of the extraordinary growth that comes from great new ideas. Case in point, Uber, the ride-sharing app. It was created as a company in 2009 because the founder had a hard time hailing a taxi in Paris. It's a great idea, so much better than the old taxi system. With Uber, you know who's picking you up, you know when they'll show up, you know how much it's going to cost, you know what it's going to take to get you to your destination, you can follow along on the journey, you know that you're not being taken for a ride, you can share your travel for safety reasons. If you leave something behind, you know who to call, you can pick out your car. You even get to rate your drivers, and they get to rate you. It's a private limousine service for regular people at affordable prices. And you can have drivers run errands and pick up groceries and get you takeout food. But while the service is for ordinary people, the investment wasn't, at least not at first. It was 10 years after the first ride when the public could start investing. By then, the company was valued at $82.4 billion. Private equity investors made out big time. When the IPO, the initial public offering, came out, the little guy finally got in and the stock was $45 a share. It fell on the first day and it declined 55% for 2 years. It has since recovered, but think about that. The private equity crowd literally made billions before regular people were allowed to invest. The common people who bought in the ordinary public stock market, they lost billions, at least for the first couple of years. And the irony is that the very regulation that kept people from owning this private equity was designed to keep them safe. So safe that they lost 55% of their investment in 2 years rather than the huge gains they could have made with private equity? Why? To get to an answer, let me quote from a piece written by EQT Group titled, "Why is the Stock Market Shrinking?" It says, the number of public traded companies in the U.S. peaked at 7,300 in 1996. It's now down to 4,300. Companies are staying private for longer thanks to the rising regulatory burden of joining the stock market and the ample availability of private capital. Over the same period that the U.S. shed half its public companies, the number of private equity companies has increased from 1,900 to 11,200. Think of all those opportunities that you couldn't invest in. Notice the clear statement. The problem is, 1, a rising regulatory burden, and 2, the ample supply of private capital. Let's look at those one at a time. First, the regulatory burden on public companies has increased dramatically the past few decades. I asked Grok, give me a quick summary. Here's what it spit out. In simple terms, the regulatory burden for going public and staying a public company in the U.S. has significantly increased from 1983 to 2025. Here's the contrast. In 1983, the process was simple, less costly. Companies filed with the SEC, providing financial disclosures and a prospectus. The focus was on basic financial reporting and legal compliance. Fewer regulations meant lower legal, accounting, and compliance costs, and the process was less time-intensive. But by 2025, according to Grok, the IPO process is more complex due to stricter regulations, primarily from the Sarbanes-Oxley Act of 2002 and the Dodd-Frank Act of 2010. Companies face extensive disclosure requirements, including detailed risk factors, governance structures, and executive compensation. Compliance costs, which legal, accounting, auditing, are much higher. Often millions of dollars, and the process takes longer due to increased scrutiny from the SEC and investors. So to keep us safe, they're keeping us shut out. It used to be fairly simple to offer shares to the public. At least when I started in the money management industry, over time, it's gotten increasingly costly. In 1983, estimates are that it would cost as little as $3 million to raise $100 million in an IPO. Today, that same IPO would cost as much as $15 million. That may explain why 300 companies would go public a year in the 1980s versus less than 100 a year today. And staying public, it's also much more expensive. Contrasting 1983 to today, in 1983, public companies had to file periodic reports and comply with basic governance rules. Now, they've got all these other rules, Dodd-Frank, SOX, and so forth. They have rigorous audits. They have a lot greater scrutiny. There's cybersecurity. There's other governance factors. Government even cares how much you pay your executives. There's compliance costs, legal and auditing fees. All of this is adding up. It's very expensive to be a public company in 2025 America. Bottom line, it could cost $10 million more to go public than to start private. And according to PricewaterhouseCoopers, on average, companies incur more than $1 million of annually recurring costs by being public instead of being private. Another company documented that the additional cost to the public could be as low as $600,000 per year, which is a lot on the low end, or as high as $16 million per year on the high end, depending on the business. In short, regulations make it much more expensive and much riskier to be a public company today. So fewer entrepreneurs are willing to go that route unless they want to cash out. And if the entrepreneur wants to cash out, maybe that's not such a good sign. On the other hand, private equity is booming. Bain & Company, the firm Mitt Romney founded, he estimates that private equity assets will grow twice as fast as the public stock market, reaching $65 trillion in value over the next 7 years. That's only going to add to the wealth gap. That's all things that you as the general public will be shut out of. Private equity has been mostly restricted to only QIBs. A QIB is a professional investor with $100 million or more. As the Federal Reserve has increased the money supply rapidly over the past decade, the wealthiest among us get access to the new money first. They put it in the best private investments before any of us get a chance. We showed this earlier in a chart from the Federal Reserve itself. The M2 money supply grew from $2 trillion to $20 trillion, and the wealth of the top 0.1% went up in tandem. But the rest of us, we didn't get any wealth from that. That's the wealth gap. It's widening. And the impact is that young people no longer see opportunity for them or their family. This is a dangerous combination that will, if left unattended, destroy our free market system. We're on a path to totalitarian communism. And communism has reared its ugly head through financialization, regulation, and in the New York mayor's race. The average American, we're losing out. We're going to cover more of this and how we can fix it when we come back right after this break.
I'm outside Babe's, which I'm told is the quintessential chicken restaurant here in Roanoke, Texas. Let's go and see if we can buy the food in here, chicken with gold.
It's gonna be the fried chicken.
This is unbelievable. How am I going to fit all this in? I seriously actually don't know how to begin with this. This is so overwhelming. Do you think I can pay with gold?
I don't know. You may have to ask the cashier. I don't handle it.
Can I pay with gold? But actually, you said I could pay with this? Okay, I'm gonna pay with this, but I'm gonna pay with gold. So look at the price of gold going up. That's pretty cool, yeah? Right, this is Babes, yeah? How much gold did I pay? Gold, how many grams?
0.26.
0.26, quarter of a gram of gold. How about that?
That's pretty cool.
That's pretty cool, yeah. Success! Bought with gold, paid with glint.
I'm Kevin Sorbo. When you spend money, you consider who you're buying from and the causes they support. If you don't, then you're likely supporting companies that are trying to destroy our country and take away our freedoms. Patriot Mobile is America's only Christian conservative wireless provider. They're a cell phone company and a good one. They offer nationwide coverage on the best 4G and 5G networks along with 100% US-based customer support. But here's the deal. Patriot Mobile's mission has nothing to do with cell phones. They carry out their mission by giving back millions of dollars every year to Christian conservative causes that are actively engaged in the fight to save America. Voting is no longer enough to beat the woke. We have to band together, support like-minded companies, and vote with our dollars. That's how we win. Stop supporting companies that want to destroy America and join Patriot Mobile today by visiting patriotmobile.com or call 972-PATRIOT.
You know, if we added regulation and that's reduced the number of public companies, increased the number of private companies. Who's winning? Well, the wealthy are winning, but who also wins? China. We've got a chart that shows the rise in China's economy coincides directly with the decline in American companies over the past 30 years. And it's not a coincidence. When Bill Clinton cozied to the Chinese in the mid-1990s, the Chinese economy was substantially smaller than that of Italy. But today, China's economy is second only to the good old USA. And our investments in China have made that dramatic growth possible, but it's been private equity for the most part. The good news, President Trump, he intuitively understands all of this. In fact, he's warned about it and watched it happen from the financial capital of the world, the city with the New York Stock Exchange. And he's been taking some great steps to address the problem. Mr. President, we need your solutions. Before the break, we were talking about how New York City became the financialization, regulation, and globalization capital of the world. President Trump warned us, and he said saw it happen in real time. The wealth gap has been widening across the country, as shown in Pew Research, and that's really bad because it could cause things to come crashing down. See, in the Pew Research, middle incomes decreased, upper incomes gone up, and lower incomes stayed flat. And parents no longer see a brighter future for their children than they had for themselves. When you reach this point in a society, things start to get ugly. In fact, 57% of people believe that children will be worse off than their parents, according to the Pew Research data. Now, the likely next mayor of New York is Zoran Memdani. He's a socialist with communist ideas, associated with some of the radical Islamic tenets and a true globalist. That's what we call the red, green, blue axis, and it's targeting your liberty. Memdani is running on a platform of economic injustice. Here's the problem. Just like Lenin, Mao, Castro, and Chavez. And if he wins, it will end in misery, as it always does. The sad part is that we have much better solutions to solve the wealth gap and provide real economic justice. It's true, free market capitalism with real opportunity. And we can solve it rather quickly. Look at the gains Argentina is making. They were headed into socialism, they reversed it, and now their economy is improving. President Reagan beat communism in his day, and it's time for us to do the same here and now. President Trump is already on that path with amazing initiatives like no tax on tips. That helps working people, and no tax on Social Security to help retired people. He also has a plan to make private equity accessible for ordinary Americans, and that's good news. He's off to a good start in his second term. But people need to know he gets it, and they need to understand, unfiltered by the Trump-hating media, that he has a plan. Unfortunately, the press has not been his friend. That's why we're telling you the problem, but also the good things that he's doing. At the same time, we want to share other good ideas with him while he's in the White House. That's why I'm proposing to President Trump that he create an economic justice board. And I know I'm co-opting the language of the left, but we're proposing a constitutional free market, liberty-loving principle to solve the problem. You've already seen what we've done in 5 major states with pirate money. I wrote a book, and an incredible grassroots team responded by passing this simple idea into revolutionary legislation so that in Arkansas, Florida, Louisiana, Texas, and Missouri, you'll soon be able to hold your money in the form of gold and silver, protecting its purchasing power, and spend it when you want to with a debit card. The gold and silver gives you a choice in money, and it's entirely constitutional. You know, gold was $35 an ounce when we left the gold standard in 1971. It's almost 100 times that now. At the same time, your paper dollars lost 90% of its purchasing power. If your bank balance was in gold 5 years ago, prices wouldn't be any higher today. Family of 4 would still be able to eat out as comfortably today as they did in 2020. You're saving for a new house? The price hasn't gone up in gold. It's just gone up in dollar terms. That's a big deal. This solves the financialization issue, at least in terms of inflation. No matter how much money the federal government creates, you can be on a state-based gold and silver standard. I think President Trump's going to love this, and he's going to find great ways to support it, but that's just the beginning. We also need to encourage entrepreneurs with amazing inventions. To do that, we must tighten up intellectual property protections, especially against IP theft. China has stolen something like $5 to $6 trillion a year in our GDP just from IP theft alone. Let's revive the spirit of entrepreneurship. Let's protect entrepreneurs and those who invest with them. And wouldn't it be great to be able to invest in the next Steve Jobs or to catch Uber when it's just starting out? America is a very inventive country. With the right financial system, we can make certain that everyone can participate by owning shares or taking a job with the next Tesla. I'd love to own shares in Elon Musk's SpaceX, but it's privately held. Why not make it easier for SpaceX and other unicorns to go public early, giving real people a true opportunity? The key is to make certain that our money holds its value, then to make certain that everyone has an opportunity to build, invest in, or work for innovative companies. That's how you restore the American dream, and it happens in an environment of fair but limited regulation. Reward comes with risk, of course, and people should be allowed to take risks as they see fit. I always find it funny how governments won't let people invest in companies with great promise, but are happy to let them buy lottery tickets or visit casinos. We've been told that gold as money is too risky because the price can fluctuate. Never mind that the American dollar has steadily lost value over the last 50 years. It now takes $1 to buy what could once be bought for a dime. But gold is too risky? People see the economy as a rigged game and want to check out. But the answer isn't socialism. It's constitutional, liberty-loving free markets with a decent-paying American job, real money that holds its value, and true investment opportunities. Most people can literally become rich in their lifetime and pass along an inheritance so their children and their children's children can be better off than the generation before. And America can set the example for the rest of the world to follow. Prosperous nations tend to be peaceful nations, especially when all people have fair opportunity. Economic justice produces real benefits in wealth, peace, and even health. It's crony capitalism, where only the wealthy are allowed to succeed, that too often leads to demands for socialism. And as people prosper in a fair system, they will become individually generous, and this will help to alleviate poverty. Taxation is not the answer to fund welfare. The real solution is cheerful giving by prosperous people. We can have more innovation. We can have greater success. America has the best system in the world, and it's time for us to return to it. That's why I'm asking President Trump, please, start an economic justice board. I want to serve on it. We want to tell the American people in the world how you're already doing great things to support and prosper ordinary Americans, and we want to bring you some great new ideas that we know you'll like that will bring about genuine economic justice. We have the better approach. We know free market capitalism plus radical generosity works. We have our work cut out for us. You can keep a copy of this and read all about it in our free economic battle plan at economicwarroom.com. Remember, what we see as a marketplace, our enemies view as a battle space. This is Kevin Freeman from the Economic War Room.